Anthony too. So I think we have Nate and Cannas and Alan on with us tonight. So Alan, it's very special that he's joining. He was a member of the Hong Kong FinTech Association of Hong Kong for several years, and he left Hong Kong a couple of months ago and moved to Mexico and joined Kueski Pay, which is a FinTech that is working in buy now, pay later. And we have Nate from Tyme and has been part of one of the leaders of the Tyme product, which is called More Time, which is in South Africa. And we have Cannas, who is from WeLab, a product manager, and she has leading the product that is most resembles a buy now, pay later product here in Hong Kong. So the idea of this came from a discussion. I think there was a chat that was going and it got very lively over a weekend. And I had wanted to do this for a while, having a discussion on buy now later, because of the just incredible growth of Afterpay and Klarna and everything that they were doing and how widespread it was becoming. And since then, once I saw that there were a lot of other people interested in it, I thought this is a great time to do it. Of course, you know, we spend a lot of time thinking about buy now, pay later at Tyme because of our new product, More Time, which we just launched in South Africa. But I'm going to turn this over to the panelists, and I thought we could start with Cannas, and because she's here and has her product is across Asia and so close to home. And it would be great for you to describe, you know, what your buy now, pay later product looks like, the installment finance, and why you think it's applicable in Hong Kong and works here in such a high credit card market.
Sure. Thank you, Rachel. Hi, everyone. So my name is Cannas. So I'm a product manager at WeLab. So WeLab has been around since 2013. We are a homegrown fintech. We started our journey in Hong Kong, and our first brand, WeLab, is actually the first and also the biggest purely online lending platform in Hong Kong. So I think since through our WeLab business, we have been doing buy now, pay later since 2014 through different merchants and also through different ways. So since 2018, we started working with Fortress and FTAHK, which is one of the biggest retailers in Hong Kong, which sell electric appliances and mobile devices to consumers. So with our buy now, pay later products, basically the consumers would be able to get an instant approval and be able to break their payment, the purchase into installments. It works both online and also offline. I think the uptake has been very good. I think because we are the first of this kind on the market, I think the process, customer journey is very seamless. So I think it's a very attractive product. I think it's a very interesting questions about the high penetration rate in Hong Kong of credit card. Obviously, yes, I think on average, each consumer has 3 credit cards in Hong Kong. So accessibility to credit is definitely not an issue. However, I wouldn't completely rule out the potential of a buy now, pay later in Hong Kong. Because if we look at a market that is closer to home, Singapore, actually their credit card penetration rate is high, it's equally high, but actually there are data saying that 38% of the consumers have tried a buy now, pay later products. So that means that despite a high credit card penetration rate, I think behavior is definitely changing, especially I think in Hong Kong post-COVID, people are like a lot more open-minded about new products. I think people finally getting more used to buying groceries online through HKTV Mall, using cashless payments, going to virtual banks to deal with their banking needs. So I think behavior is definitely changing. So I think there's definitely a potential, even credit card penetration rate in Hong Kong is high.
All right, well, thank you, Cannas. And I'm going to turn this over to Alan. And Alan, can you explain the product that you have in Mexico? Its uptake, unique features. Do you work with both online and offline merchants? You know, how actually does your product work?
Yeah, hi everyone. Well, buy now, pay later in Mexico is definitely new. So we at Kueski are where financial inclusion is quite low. Only, I have the data here, less than 48% of adults actually own a bank account, and credit card penetration is really low. It's at 21%. On the other hand, there is a culture of buy now, pay later already. For many, many years, there's been installments at no interest, right? So people are very, very used to buying, especially electronics, your airline tickets, your refrigerator, etc., and pay in installments. So credit cards are giving that sort of solution for years. But as I just said, right, financial inclusion is really low, and not everyone has access to credit cards. So the potential of a buy now, pay later without credit cards in developing countries is huge. And that's what that's where we come in. So Kueski has been leading the online lending business for years, a little bit like WeLab in Hong Kong. In fact, we are now reaching the 4 million milestone. So we're about to close our 4th million online loan. And that's really how the pay or the buy now, pay later product came to life, because all of our knowledge in artificial intelligence, in KYC, in understanding a customer with very, very little data. Honestly, we are really finding alternative ways to measure and evaluate a customer, right? So that's a little bit the background of Kueski Pay, which is our buy now, pay later product, which at the moment it is only online. I'm heading the product team, so all the product roadmap and all the features are under my responsibility. And yes, we are planning to go into some sort of a hybrid online offline product as well. So we are literally developing solutions so that we can offer our product in stores as well, right? So yeah, I'm happy to maybe go a little bit further into details, how we integrate into the different e-commerce platforms, the relationship with the merchants, and I'm sure that sort of questions will come up in a moment.
Yes, yes. All right, so I'll turn this over to Nate to talk a little bit about More Time.
Thanks, Rachel. And thanks everyone in the FinTech Association and everyone who's joined for having me. It's actually particularly exciting for me because I feel like in the last year with everything going on in Tyme and the launch of our product, I've been quite heads down. So I haven't been in these type of forums in a while, and it's good to engage with everyone again. Yeah, so our buy now, pay later product, or what we call More Time, and as the name kind of suggests, we give our customers more time to pay. The customer specifically has to pay 50% upfront and the remaining 50% over the next 2 months. So very similar to kind of the leading buy now, pay later products like Afterpay, et cetera, in the general construct, but quite different in a couple different dimensions. One is that it's embedded into a bank account offering. So unlike, Alan, we're actually a bank account with almost 3 million customers in South Africa as a digital bank. The second one being is that we have a very physical go-to-market led strategy. And this is mostly a function of where South Africa is as a market, quite far behind on e-commerce penetration. So well over 90% of retail transactions happen in physical retail still. So we will get into e-commerce, but probably the opposite of Alan. We're going to be starting in physical and going to digital later. But to maybe quickly kind of make this product come to life, I'll just kind of walk through the journey quickly. Let's say I'm not a customer of Tyme yet. I walk into a Nike store who offers More Time. I would have to download the Tyme Bank app, sign up for Tyme Bank. That's about a 3-minute process, facial recognition driven. So I open my fully KYC'd account. Then with another 2 clicks, I can apply and activate my More Time product or facility. So we kind of do real-time scoring and give you a limit on the spot. Then the customer would have to fund that. And there's 2 ways the customer can fund that that product. And one is they could lodge a third-party bank card. So this is very similar to how Afterpay does it. So just become a Tyme Bank customer, no money in it. I can attach a standard bank card for it with it. The other option is that, I could just do a real-time EFT in from another bank. Then I would take my goods, with a pair of sneakers, go to the till point. Then I need to open up my app again and check out. And depending on the merchant that you're in, you'll either need to provide a one-time code that you generate in the app for the cashier to scan, or you yourself will be scanning a dynamic QR that the retailer generates. It kind of depends on the store format and the till operating system. Then when that happens, as I mentioned, 50%, so we'll take 50% right away from the customer, and then 25% at 30 days and 25% at 60 days. And from there, though, that limit changes daily. So depending on how they behave with us repayment-wise, it's very much a low and grow strategy. It also allows us to approve more people, get more people in the door. So it's very much an access play. But depending on how they behave with More Time, but also how they behave in our bank account, how often do they transact? What's their cash flow look like? Do they save with us? Do they get their salary paid in? We will then grow that facility or decrease that facility on a daily basis. Maybe last thing before handing back to Rachel is where we are today. So we did as Rachel indicated, we did a soft launch starting in December, but we're quite subscale from an acceptance perspective. So while we have one side of this platform sorted, we have the 3 million customers. We don't have merchant acceptance there yet. We're only in 2 brands and 750 stores. So over the next 6 months, and I think we'll have an opportunity later to talk about some of the strategies of how we rapidly expand. We need to go to hundreds of brands and thousands of stores, including e-commerce. I think very much similar to actually Alan and Cannas. It's a nascent industry in South Africa, in that there's buy now, pay later. There's a couple fringe players who are doing e-commerce only, early stage, but your average person has never heard of buy now, pay later as a new model. So we have so it's kind of this land grab phase of the market. So very excited to chat more about it later.
Well, thank you, Nate. And I do want this to be interactive. We have a number of different people on this, so if you can put questions into the chat, that would be great. So if we go back to Alan and to Cannas, so there's a question on what is the demographic trends and who's using your product? Have you seen anything about younger? I mean, there's an assumption with buy now, pay later that it's the millennials and younger that's instead of a credit card, that this is replacing credit cards. Are you seeing that? And are you seeing any demographic data by gender? Which is an easy way of asking, are you actually even sex disaggregating your data too?
I guess I will go first. For our buy now, pay later product, is actually very similar to all our other products in our lending business. Our target segment is always 25 to 35, the young and tech savvy customers, and who are very used to applying for shopping online and doing everything on their mobile. So I think from a demographic point of view, it's also the young millennials who are so used to doing everything online.
Yeah, we definitely see this, Rachel. So I guess the answer is it really depends on the merchant and the industry. We have a lot of fashion and beauty merchants. About 50% of our merchants today are in fashion and beauty. We know how to serve them. Our average ticket sizes fits well, so our product market fit fits really well with a lot of cosmetics, fashion brands as well. So in those merchants, it's definitely very millennial, even xennial as well, and rather female. But we also work in several industries like airline industries. So there it's totally different, right? You can buy your airline your ticket online on a low cost airline here. So your average ticket size is about $120, less than 150 USD. And we finance that. So when you see that in those sort of merchants, the demographic it's still very young, but not particularly not necessarily female. But they're more the millennials. And as I said before, since not everyone has a credit card, so we really open it up to the general public.
Yeah, so Alan, I guess since I have you on this right now, you just heard both Cannas and Nate are representing regulated financial institutions. WeLab is a virtual bank here, and Tyme has a regulated bank with a full banking license in South Africa. But you're a FinTech, and do you think there are benefits to doing this as a FinTech, that you can be more efficient and faster to market? And what are some of the challenges you see by being a FinTech, if there are any?
Yeah, let me just clarify that. In Mexico, there's a FinTech law. So there are certain companies that fit into the FinTech law, and Kueski is not one of them. So in the general sense, we look like a FinTech, but in the regulatory sense, we're not. However, there are several rules in Mexico that limit us to finance up to a certain ticket size. So we are compliant in that sense. So in order to make an online lending is capped at around 950 USD. So all what we financed in order to make all the journey fully online without any human interaction, right? So we automate the whole lending process. We're capped at $950. So that's where. Now, if we would like to go further than that, we would have to apply to a different license, and then our customer journey would be impacted. So we would probably need to do like online video conferencing in order to actually validate the identity, the customer's identity. So we're not there yet. So since we really want to have that fully automated journey, we comply to that regulation. Banks, if you ask me whether this is an advantage or not, I would say, yeah, it's an advantage, right, for us to be in that regulatory environment. I would say in other markets, there's perhaps more regulation than in Mexico, and therefore the rules are stricter.
Okay, yeah, I mean, I think it is interesting because you're seeing a lot of change where, Afterpay and their regulatory environment and Klarna has changed a lot, and they've made different decisions as they've grown. Then we do see now this whole move with digital banks launching quite quickly into this area by seeing it that they can use, and part of that is through data. So, Nate, in terms of, you talked about acceptance and building that out first and how you picked that. We have a question about how using alternative data besides the bureau in the onboarding and decisioning process. So it would be interesting to hear how Tyme does this with its relationship with the retail stores.
Yeah, no problem. Yeah, there's kind of 4 legs to our decisioning strategy now, or planned, and 2 of those are live. The third and fourth are in progress. So the first is probably the most traditional. So that would be the bureau. So we're kind of using the bureau data as well, also kind of some proxy income data around there, obligations, et cetera. But that's quite standard. The second is applies for the customers who've been on our book for more than 3 months. We're looking at their behavior. So, what is the cash flow of them as a transactional and savings customer? How much are they saving, et cetera, et cetera? Do they have their salary paid in? So that is also factors into the approved decline as well as the facility. The next two legs, which aren't live yet, but it will be in the next few months. One is phone data. So we're partnering with someone who would then, we're essentially integrated now to them. But we actually need to get a certain amount of bads before we can actually confirm that model and turn it on. But that will look at, the customer will have to opt into this. So that will look at kind of some of their call patterns, geolocation, et cetera, in an aggregated forms. But, there's quite in some may view as quite kind of an intrusive look into your behavior. But that will kind of explicitly let the customer opt into that. But that will increase the acceptance. So that's the third one. And then the fourth one, as you mentioned, Rachel, is with the retail data. So for those of you who are not aware of Tyme Bank's business model, our kind of twist on the typical digital bank is that we team up with retailers to give us physical distribution. And with that, we also, so that's cash in, cash out in a place of KYC and origination. So we issue our debit cards in real time off of these kiosks. And then the third leg of that partnership, though, is access to their loyalty data. So we've built lending models off of that basket level data. So, I think Alan mentioned the struggle in markets like Mexico and South Africa, where the bureaus are not as thick. So we have lots of what we call thin file customers. So we'll also be using that retail data to kind of combine in that decision.
Yeah, so what we hear is that if you call more people out than you get called, that seems to be a high percentage to pay. And then if you buy, like in Tyme, people say often, if you buy one type of shampoo and it changes, that means something. So it's quite interesting to see how that all works. Yeah. So Cannas in Hong Kong, yeah, Kitty?
No, sorry, I was going to say it's interesting also, like the bargain hunters who are buying special actually are better at paying loans back, et cetera, as you said.
Yeah, so Cannas, you're dealing again with banks where you have bank accounts, you can see the bank account information. How do you use both traditional and kind of alternative data to just make your loan decisions?
Yeah. So actually, WeLab as a group, we have a branch. We have a brand that is a bank which is regulated. So, but then as a group, as a fintech, we don't only rely on bank account information to make decisions. I think with very similar to what Nate mentioned, we look at different data sources to help us to make those decisions. I think bank account information is just an additional data point for us to assess the customers, but we look at the behavioral, we look at the social data, we look at the transactional data for us to make those decisions. So I think we look at both bank account information and also all these alternative data. And the beauty of that is actually work in all sort of markets, like markets in Hong Kong where there's a very strong credit bureau system, but at the same time it works in market like Indonesia and also mainly in China where credit bureau it's not as strong. So we can rely on both set of data to make credit decisions.
All right, so now we'll start getting into more of the detail of this. So now, when we talk about credit cards, and we say that buy now, pay later is replacing credit cards for millennials, and this new term that I had not heard before, Zennials, which I'm going to use at home now. But with this, there's a way that credit cards make money, which is they start to make money if you only pay a percentage and then you pay based on the interest for credit cards. Now, let's think about buy now, pay later, which is very different. So what are the revenue models? Is it based on late fees? Is it based on relationship with merchants? how are you guys planning to make money from buy now, pay later? And we know you make money from this because Afterpay is still one of the highest valued stocks in Australia. So clearly a number of people think you can make money from this. So Alan, how are you making money?
We are not making money from late fees. That's really not. Let's start from where we don't make money. Let's say we have a very strong arrangement with the merchants because we can show them value by adopting this alternative payment method. So we could make money also by charging interests to the customers, but the data it's very clear. Customers don't want to pay any interest, right? They're used to pay they used to pay their purchases in installments at no interest. So our goal is to give them that, right? That's really what people want. It's more installments and no interest. So we have no other choice than to charge the merchant. Now the balance is, well, how much, right? And that really is depending on the service that we provide and the value that we provide to the merchant. So all of my sales team is doing is showing them how much more revenue can you merchant make, how many more people that today can't buy on your website because they don't have a credit card or they don't have just the perfect way to purchase. So we are showing that to the customers and to our merchants, right? And that's how it's picking up. We are literally onboarding by every week we have several new merchants coming in. So I guess we've been iterating as well, right? So what are the fees to charge the merchant? We've also done some interest, so payments with interest to the customer, and we literally see how our curve goes down. So we've been trying and doing some A/B testing, some trial and error, also checking in different industries and different merchants. But yeah, it's I would say the secret is the relationship with the merchants, and we go together, right? The merchants and us, we're collaborating really closely.
So is your business model to you, when you think of who your target is your target the merchants and then the merchants market to the customers, or do you go direct to the customers?
We right now is B2B2C, definitely, because we are still at the growth stage. The moment we are perhaps larger and stronger, we'll go straight to the customer. But at the moment, the strategy is to go to the merchants, and the merchants have their audience, right? But that may change in, let's say, in a year's time.
All right, so Nate, if you look at More Tyme, how do you see More Tyme making money?
Yes, I mean, it's similar to what Alan said. The primary revenue source by far is from the merchant. So let's say, for example, the merchant typically pays a 2% blended rate on debit and credit card. We're going to charge something in between 5 and 6%. So the merchant is essentially funding the lost rates, et cetera, the lending product. So the credit risk. So now, and I think back to kind of build on what Alan said, it's all about then the pitch to the merchant. And the pitch to the merchant is probably, what we make is twofold. The first is around access. So not only access to our 3 million customers, but in general in South Africa, credit card penetration is really low, say like 12% or something. The consumer credit is post-COVID now is shrinking significantly. All the banks, et cetera, with payment holidays that have been given out are really tightening their criteria. So it's really difficult to get retail credit, traditional retail credit, unsecured loans. And just maybe just as a a benchmark, only about 20% of our customer base, which is kind of emerging middle class mass market, would have qualified for our term loan, but double that, 40% qualify for more time because it's a smaller ticket size and it's that low and growth strategy. So it's a big pitch to the merchant is around access, the fact that the customer can show up, sign up, have a facility, and more people can get that facility. And then a lot of it is also around this use case studies, so while we don't have the scale to kind of show them empirical data yet, Afterpay and Klarna have consistently seen 20-25% increase repeat purchases, 20-25% growth in basket size, less fall off at the checkout, on e-commerce. So I think we also have to make that international pitch, which is sometimes difficult, given this is not something that the retailers know about much, with the exception of some of the international brands. And maybe the last thing, Rachel, because I know one of the things a lot in the media is around, Afterpay and Klarna earning a large portion of their revenue off of late fees. So we've assumed it's definitely maybe around 5-6%. I can't remember the unit economics. It's very small as a contributor to our impact. I think what has happened in some of those markets, beyond probably overextending, that there's such strong brand affinity, and almost it almost becomes like a social thing. You kind of go out with your friends and you're buying with Afterpay, that people are actually coming back and curing and actually paying that. So we do charge small late fees, but from a business case perspective, that's tiny compared to the retailer commission.
Yeah, and Nate, there was just a question, so I'll ask you. So is the plan to bring more Tyme as well into the Philippines now that Tyme has announced its move into the Philippines?
Yeah, I mean, I think we still have to go through the bank license application process, but yes, that would be the hypothesis, is that's likely to form a strong part of the proposition. Yeah.
All right, so Cannas, tell us, how is WeLab making money from this product? Now that you've heard what Alan and Nate are doing, is it similar and what's different?
I think in some ways they're very, very different in terms of how we charge customers. But I think since 2013, we have actually experimented both charging customers an interest rate and then charging merchants an MDR. So it really depends on the customer segment that we're targeting and also the merchants that we are working with. But I think as we have seen from a lot of all these buy now pay later players, Afterpay and Klarna, I think the model that interest-free for consumers, actually it works really well to help them to build the customer base. And I think merchant also see the value of that as a marketing tool rather than as a financial product. So I think, so in short, we have done both and we have experimented both.
So I'll ask you this, how do you actually market it? So if I go to retail, would I see WeLab there, or how is the marketing done for the product? How strong is your branding at the retail checkout?
So we actually, if you go to any Fortress and any 3HK, basically you will be able to see our buy now pay later product, which is called Freeman, which is powered by WeLand. So it actually, so customers would be able, when they check out, they will be able to at an offline store, they will be able to give in on their mobile phone and just provide a few pieces of information, and then immediately they will get an instant approval. And then basically, without, let's say if they were to buy a fridge, they don't even have to take their credit card out. They will be able to leave the store with a fridge. And also on top of that, we also top it up with a cash loan, so they can also use this money to spend it elsewhere. So I think customer has found that the process has been very seamless, and then especially I think back in 2018, Hong Kong market predominantly was still very offline driven. So the ability for us to connect offline to online, that's actually a very new experience for the Hong Kong market.
But do you think the Hong Kong market's going to pick this up? Do you think this is going to be successful here?
I think so. I think something that is very unique in Hong Kong is that the awareness of buy now, pay later is actually very high. I think as Ellen mentioned in Mexico, buy now, pay later is not a new concept. I think interest-free installment have been around for a long time. If you walk into a Fortress, a Broadway, and then customers are actually very used in breaking the purchases into installments. So I think it's just that the market is very fragmented. Right now, you only see these interest rate installment available at certain merchants, usually higher ticket items, mainly because the market is credit card issuer driven. They cherry pick those bigger ticket size merchants to offer that properly from a revenue, a potential point of view. But Hong Kong, there's actually so many untapped verticals. For example, e-commerce, you don't see many people offering an interest-free installment. You see like smaller ticket items like groceries, I think fashion, gym equipment. None of that actually have an installment-free installment payout options. So I think once consumers see that these payout options are available at all these merchants, I think customers definitely jump on it and like give it a go. And especially Hong Kong is such a performance-driven market. If it's interest-free, customer would definitely try it out.
Yeah, so now there was a question to you about that you talked about how this is working in Singapore, and we have seen, you know, Tyme and Hula moving forward in Singapore as well as other companies. But how do you think this will be differentiated in Hong Kong with Singapore, and how are you working with more migrant workers or the foreign workers?
I think, as I mentioned, I think it's the unbanked population here in Hong Kong. Actually, yes, there's not everyone sort of have a bank account. So I don't think it actually plays a huge reason of whether people pick buy now, pay later or not, because essentially everyone has a credit card. So I think it's really about the value proposition there. So as I mentioned, Hong Kong people are very performance driven. When they see the value of it, they would just go ahead. If someone is funding me and offering me 3 months interest free, and then I can break my purchase into installment, and for me to not go over my monthly expenditure cap, why not? I think there is definitely a huge potential in Hong Kong.
Yeah, and I think in Hong Kong, if you look at things like Planto and people who are looking at, you know, measuring on their phone their expenditures, this will play right into that type of environment. Yes. So Alan and Nate, I mean, I think that both of you have spent a lot of time studying the Afterpay and Klarna market models. So, like, what do you think that was the best things that they've done and you've taken, and what are definitely things that you think that you have improved on from their models? So, Alan, do you want to start with that?
I wouldn't say I've studied them a lot, but I've studied them, right? I certainly have purchased some H&M t-shirts using Klarna. So I like their checkout experience. It's very well done. One hurdle we all have in the buy now, pay later is, and we can go into the detail, but it's redirecting. You know when you click on checkout with my product with Kueski Pay, we at the moment we have to redirect the customer to a landing page and then do the onboarding, the evaluation, and then we sign the deal all online in a couple of minutes, right? But that step from the merchant to the payment method is a hurdle, and everybody in the buy now, pay later is suffering from that. So one thing that Klarna has done really, really well, and I guess is because of their very strong relationship with their merchants, is to customize their integration. So they've integrated themselves into the merchant's checkout. So I like that, and that's something that I'm looking to do as well. But that is a on a case-by-case basis. That's relationship with merchants where we can really integrate our payment experience within their checkout page. So that I like very, very much. On the other hand, they are quite different from how we do stuff, because they ask for credit card data, and that makes their life much easier than ours, definitely. If I may answer some questions that are on the chat as well, we are not really transparent. Someone said there we are transparent. We're not. We are very visible within the merchant's site. We do a lot of co-marketing with the merchants. So the merchants use us as a sales argument, similarly to, you know, free shipping, only free shipping this month or this week. Well, they would say only this week, buy now, pay later at no interest, right? So we really work with the merchants to promote our product, and I would say that's the way we market ourselves, right, at the moment.
Right, and Nate, like when you in designing more time, what did you take and what did you reject?
Yeah, I mean, I think we're similar. We're very obviously impressed with the customer experience. I mean, we have kind of copied quite a few things, and Afterpay, our checkout is quite similar. But one of the things probably I'm most impressed with is more actually the business model innovation they've done. In what I mean by that is people don't, as much as us in fintech and banking think they don't want more time. They don't want buy now, pay later. They want the pair of sneakers. They want, you know, the jewelry. They want the cosmetics that Alan refers to. So I think what they've done extremely well is they've flipped the model to actually making themselves, you know, when you land in the Afterpay app, it looks like an e-commerce site. They're actually advertising their brands, and they're sending you, you know, bi-weekly emails on specials on this pair of shoes, or specials on this holiday, or whatever it might be. So I think, and that kind of totally changes the customer mindset. And I think even for us in our marketing team, it's been quite difficult to make that change of mindset. Stop telling people about more time as if it's the thing that we're selling. We're not selling more time. We're selling the products that our customers want, that you can buy more of with more time. So I thought that kind of business model innovation was the most impressive thing once we were studying them. And in particular, Klarna has taken that a step further. I think this is where this is probably going in the longer term, because, you know, as Klarna has been monetizing as well, is actually on the affiliate marketing side, the referral side. So on top of getting money from the merchant when they're transacting with buy now, pay later at checkout, they're also getting money for referring, because they're getting so many people looking on their app on what to buy and clicking within their app before they jump to the Nike site. They're actually partnering with kind of large affiliate networks, affiliate marketing networks, where they're actually getting, call it referral commission, which is often actually a higher commission than the commissions I was referring to. So I think we were really impressed on the business model innovation. And again, that kind of factor, that's a big part of our marketing strategy, is kind of in-app and also with email, is kind of pushing customers. And I think that's also an attraction that we sell to the merchant. We have 3 million customers. We're going to be telling them when you have a special. We're going to be telling them when you join our platform.
Yeah, so, I mean, I guess now we have a host of questions, and I'm going to direct this to Cannas, because this is really about Hong Kong and, you know, is this going to work here? But there's all these questions about, you know, you get all these rewards if you use your credit card, and it's really easy just to pull out the credit card. So like, why even try buy now, pay later? On the other hand, we do also know that in Australia and Europe, I think people are like, why even get a credit card if you have buy now, pay later? But here in Hong Kong, you know, is there is there enough incentives to actually change? And do you think that there will be that change?
I think so. I mean, there are people that probably want cash back, but there are people also probably just want purely just break it into installment payment. So I think maybe if people are really chasing after cash rebate, might be that might not be the option for them. But I think there will definitely be a different segment that would want something beyond just cash rebate. So I think there is still, I would think that there is still a huge potential for that, even though a lot of people, a lot of credit cards are offering cash rebate right now.
Do you think that the cash rebate is going to stay, or is that, I mean, right now it seems like because of the virtual banks are also offering a lot of cash back. It just seems like a wave in Hong Kong of cash back. But do you think that that actually, is that just going to continue, or is that just a fad right now because of the new banks coming online?
Oh, I think that's a very interesting thing. I think it's also a byproduct of COVID. I think before pre-COVID, I think there was two camp people going after cash rebate, and there is a camp which is going after mileage. But obviously now, even you have like 1 million miles on your credit card, you can't really spend it. So that's why I think it's easier for people just go after the cash rebate route.
Yeah, because I think I would say that for Nate and Alan, I mean, correct me if I'm wrong, but it seems like the majority of your customers might not be ones that are now credit card customers, and this becomes their mechanism because they're not credit card customers.
Yes, I mean, you know, if I took a step back and said, would I prefer to be in South Africa or Philippines than Hong Kong with buy now, pay later, I'd take it where I am. But with that being said, there's actually a funny story. It's kind of a friend of a friend who was one of the first folks at Afterpay. And obviously Australia has very high penetration of credit card. And before he joined, he came home and told his wife at the time that, you know, this is his crazy idea, his friends, and they're starting this business. And it's very, very, very early days, only 4 or 5 of them. But why would anyone do this? This is a credit card. And actually his wife said, but no, like I have a certain amount of money that I use every month, and I would actually use that to budget. And I would definitely get this product. So, you know, I think his wife saved them couple $100 million maybe. Because the history is he joined Afterpay. But if you look at I think you'd have to probably take a different, you know, I probably know the least about the Hong Kong market because I've never worked in financial services in Hong Kong. But you probably need to take a different approach. So if you look at the marketing in Australia, it's very much sold as a budgeting financial management tool for folks who feel like they have less control with the credit card when you're just kind of swiping, just the way they display it in the app, and they're splitting up over, you know, equal payments across multiple months. I think it would be probably it's more difficult here probably than an emerging market where there's low penetration, but I definitely think, obviously it's possible if you look at what's happened in the US and Australia.
So I think one of the big questions that's out there right now, if you look at the market, is should this be regulated? That if you're making money off of for those institutions that are making money off late fees, or as this grows, there's been a lot of discussion in Australia and the UK that buy now, pay later should be regulated so that there's more of a responsible finance aspect to that. So, you know, right now, Alan, since the other two are in they're coming out of regulated financial institutions, what is your view? Do you think that this should be regulated?
I think it should be regulated, yes. On the other hand, buy now, pay later is everything that the credit card is not. The nature of the product is to avoid large late fees and penalties and so on. All the things that people fear from using their credit card, right? We all know that if we don't pay our credit card on time, the late fees are crazy. So that's the fear people have. And then buy now, pay later comes in and says, we don't do that. We definitely don't do that. So, so the nature of the product is to be very fair. It's all about financial inclusion, right? It's like very responsible debt. That's what we're building. And I guess Nate, you're doing the same in South Africa, right? It's not about overcharging crazy late fees. It's totally the opposite. So I do think it should be regulated, but on the other hand, I actually think the nature of the product goes against all of that, and that's, I would say, one of the big points why BNPL is growing so fast, right?
Yeah, so now, I mean, there's a question Anthony is sitting next to me. He asked many questions, but one of the ones he asked is, have you done easy try and return part of BNPL in these markets? Okay, so first of all, I guess I didn't know about easy try and return in other parts in these ones. So anybody thinking about offering this part? And I would say this is more on the e-commerce, and he says it's really big.
Since I have the microphone in unmute, so I just can tell you one thing. Cancellations are a problem today. It creates us a huge operational effort. So the less cancellations, the better for us. If you think about the cash flow, right? A person does a purchase today, the merchant ships the product same day. The person gets the product by tomorrow or in 48 hours. And we've disbursed our payment to the merchant. Now the customer decides that they don't like that T-shirt they bought online and they want to return. So that creates for us, an operational burden. We are working on automation. We're working on a lot of things, but today, as of today, I can tell you it creates a bit of an issue. So I wouldn't be a very big fan of try and return with BNPL. Maybe in a quarter from now, I can tell you otherwise.
Yeah, Cannas, what about doing this in Hong Kong? Are you going to do easy try and return?
I think, as Ellen mentioned, it's actually not an easy thing to do because it actually incurs a lot of operational effort in it. But I think we are also looking at how to crack this, because obviously this is how customers behave right now. So I think despite having the operation burden, we're also looking at ways how to do it the most efficiently and then bringing the things that customer want. But right now, no.
All right, and Anthony also wanted to know from you, if you think, if we look at what's happening in Australia, UK, Canada, where this is all really booming, it's been a lot about somewhat aversion to debt or credit cards following the financial crisis and different things that happen with young people. Now, do you think, and they see this as more like a deferred debit card, do you think that that's also an accurately portraying why this would grow in Hong Kong? Is it viewed as kind of a way to do deferred debits, or do you think that people there's a fear of debt here in Hong Kong, similar to there is in other countries right now?
That was a question to me, I guess, right?
Yes, because Anthony's writing these things saying Cannas. He asked you that question.
Okay, all right. I think Hong Kong, especially the young people, I don't think the stigma of using a credit card is actually as serious as the Western market. I think people still spend on credit cards, but I think with the millennial, they are also huge about how to budget, and also everyone in Hong Kong. I think the final goal is really to get the first apartment. So that's why the mentality is really how do I save and how do I budget? So I think purely because of that, I think Buy Now, Pay Later offer them as a tool to manage their budget properly with the right design, obviously. I think there are a lot of customer pain points in the West that we hear that, because it's so convenient, they lost track of all the Buy Now, Pay Later transaction they got into, and because of that, they have to pay a lot of late fees. And so I think with the right design, with the right reminder, they have full visibility of all the transactions that they have spent on buy now, pay later. I think it's actually a great tool for managing their budget.
Yeah, so Nelson just said he would describe this as Shibal Byung, which I'm probably not pronouncing well, but he put up something for people to read about Koreans, and we can all see if that's deriving this. Again, I mean, I think that there's an assumption that is more of the younger people using this. And I think Alan, you and Nate, both of you would agree, is that the target market that you think you're going for?
I'll go again. I would say it really depends on the merchant, on the industry. Okay. No, I wouldn't say BNPL is only for millennials and zennials. I wouldn't say that's the case. It really depends on the industry. Buying electronics online may not be as as young and as fashion and beauty. Definitely fashion and beauty. Yeah, it's very young population there. But buying your ticket to Singapore and paying it in 6 easy installments, that not necessarily goes for millennials.
Yeah, I think we're similar. I think very merchant dependent, and also because we're focused initially on physical, we'll kind of get a wider demographic. Obviously, there's still that filter. You have to use your phone to check out. So there is a natural bias there. But some of the other use cases, I think there's the obvious ones like fashion and jewelry and electronics that we're pursuing. But the other ones that are really, we're getting a lot of positive response from the merchants for is things like in the medical space. So, buy now, pay later. A lot of people in South Africa, you'll have an excess if you have health insurance, or if you don't have health insurance, you want private healthcare. So we're likely going to be doing a deal with an aggregator in the medical space. Buying tires are quite an expense, breaking that up. A big thing in South Africa is school fees as well. So we're talking to a lot of the kind of private schools around, you can actually, instead of, because typically you have to pay like a quarter up front or a term, and you can break that up further, even if you have to if you've had a tough month and you can break up in January after the big Christmas spend, you could break up the January payment if you're paying monthly. So yeah, I think there's a natural bias because of the digital channel, but definitely more driven by the merchant.
All right. Well, I think that I hope we answered everybody's questions. And I think this has been a really interesting discussion, and it showed that there is truly interest in buy now, pay later in Hong Kong. And whether that translates into people actually going out and using WeLab's product in Hong Kong right now, that would be great, but also that this is really a booming idea across the Asia market. And you can see it is a global phenomenon where we're talking from, Mexico, South Africa, and across a number of Asian countries about how interesting this is. So we're looking forward to having our own versions of Afterpay and Klarna, and hopefully all 3 of our panelists will be able to have the same amazing experience in terms of growth that they've all had. So thank you very much. First to Alan, because it's like 6 a.m. and he tried when it was 4:39 in the morning. So that was very nice. And it's great to see you, because I think it's been only like 3 or 4 months since I remember not that long ago when you wrote me about a going away party. So it's only been a couple months. So it's really nice to see you. And
4 months, yes.
Yes, back doing things in Hong Kong, and we all it's great to see what happens with people when they leave Hong Kong. And Cannas, it's great to hear about WeLab, and definitely promote your product among all of the FinTech Association. And Nate, of course, thank you for joining me on this tonight. And we will keep people updated on the progress of More Time. All right, thank you. And thank you to Anthony, who's my partner in crime, and he took all the notes and told me which questions I should be asking at which time. So It's very nice to do this with someone else in the room. Thank you so much. And we'll be in touch about our next discussion in a couple weeks. Bye.
Cheers.
Cheers, everyone. Thank you. Have a good evening.
Bye.
Everyone.